Hello, everybody. I'm going to give it a few seconds to have people join in as we just get started. Welcome to my channel, Home Savvy Central, and also it's live on Real Estate Simplified, also is known as Mike Patel Group. I'm in Anaheim Hills, California, Orange County. Great weather today. Election is tomorrow, but we're not going to talk about election at all. And today we have a special guest. I'll introduce you to her shortly. And as we wait for more people to come in, I hope you're having a great day. If you have any questions, please comment or ask a question. If you're watching this as a recording, if you're live, then ask a question and go for it. So let me bring on Wendy. And the topic today is why homeowners are struggling to afford monthly expenses. And this is a very important topic because not only are the newer homeowners struggling, but homeowners who have been there for 10, 15, 20 years are also struggling. So we're going to nitpick on why this is a situation. It should not be that situation. So let's talk about it. I'm going to bring Wendy Pennell. Hi, Wendy.
Hello. How are you?
Wendy, good. I'm glad you're here. I know Wendy through her YouTube channel. She has a really nice YouTube channel. Wendy Pennell is in Dallas, Texas. She has a YouTube channel for the last 3, 4, 5 years, and she get a lot of interactions, a lot of questions, a lot of comments on her channel. So I thought it'll be my honor to bring her on. Although we're going to talk about home sellers, she focuses a lot on home buyers. But home buyers become home sellers and they get into this situation. So Wendy, tell us about yourself and we'll get right into our topic and not waste our viewers' time.
Absolutely. All right. The 30-second intro. I help buyers. I'm a realtor broker. We work out of Dallas. And I am a self-professed data nerd. I like all things data. I don't like it when buyers buy without the data. Really like to do a lot of analysis on the market analysis, all of that. Super important to us. So I know Dallas like the back of my hand. So if you have any questions about Dallas, I'm here. And I love doing live streams. So really glad to be here.
Yes, I know you do live streams as well. Mm-hmm. And your business, you have your family involved in your business. You have a team. Right. So, yes. And I hear you stay pretty busy with the Dallas market.
We absolutely do. Very
right.
true.
How is the market going on right now? I mean, is it still very on steam, full steam ahead? Is it slowing down because California has slowed down a little bit because of inventory issues? What's happening in Dallas?
Well, Dallas has really big seasonal pulls. And so right now we're on that downtrend and it's great. I love the opportunity because usually between like June and January, we'll see like a 10% drop in prices. And so that's exactly what we're seeing, just like clockwork every year. So yeah, this is my favorite time of year because because I negotiate fantastic deals. And it's just the sellers are very happy to do it.
Right.
So right. It's from a seller's standpoint, it's not a great time of year, right? They're not happy in Dallas, but buyers doing very well in Dallas right now. So
great. Okay. And there's still a lot of people moving into Dallas from California and other states. Yes. I hear Florida, a lot of Floridians are moving out of Florida and coming to Texas of all the places. The number one state for Floridians to move out is Texas.
Yeah.
I'm not sure why, but I'm sure the prices are pretty reasonable. Maybe they're fed up of these hurricanes and insurance costs, which we'll talk about. One of the biggest states affected, one of the biggest states where homeowners are affected is Florida. So we will touch upon that. Let me read an article. I saw a YouTube video of all the things which I follow. It's from the NBC channel. And they talked about the hidden fees of owning a house, how homeowners are struggling making the payments, whether they are newer homeowners or they are homeowners for the 10, 15, 20 years. Maybe the salary went up, but not high enough, but other costs are coming in. So I'm going to read a paragraph from that video so that we see what they're saying. This is from, like I said, from the NBC, one of the videos that they put out a few months back. It says here that record high inflation and rising property values have led to significant increases in property taxes and home insurance premiums, with property taxes rising over 25% from 2019 to 2023, and insurance cost up by 20% between 2021 and 2023. I'll read one more paragraph and then we can discuss it. Many recent homeowners regret their purchase due to unforeseen cost, with some taking on additional debt to maintain their living standards. The rise in home values has outpaced income growth, causing affordability issues and a house rich, cash poor situation for many.
Mm-hmm.
And I think that's very true. Does any of that resonate with you or your clients that you have, Wendy?
Mm-hmm. Absolutely. Absolutely. I mean, we've definitely seen that. I think a lot of people that own homes now would not be able to afford to buy the same house today.
Hmm.
Right. So they're grandfathered in, but then the problem is they're having to pay as those property taxes go up, you know.
Right,
And everybody knows, or hopefully everybody knows, in Texas, property taxes are a beast because we don't have a state income tax. So that's where, the money is collected is, those property taxes. So we
right,
are especially, I would say, especially vulnerable to
right, right.
values going up and property taxes and insurance consequently going up. So,
Yeah, I just found out about that Dallas did not have any cap on property taxes, unlike California, for example. I'm in Anaheim Hills, Orange County, and our property tax in Orange County, just to let you know, Wendy, maybe you know it or not, we have a fixed property tax of 1.1%, which is the base of your purchase price. And then every year, because I believe in the early 80s, there was a Prop 13, which was the Howard Jarvis Prop 13 initiative, where he locked in the property tax at 1.1%. That's the best thing that happened for homeowners. So it only goes up about 2.5% per year. I'll
wow.
give you an example. If somebody had bought a house, I'll give you my example. I hate to
Mm-hmm.
do that. I bought my house in '96. It was less than $300,000 at that time.
Mm-hmm. Mm-hmm.
My current property taxes are in the $5,000 to $6,000 a year range,
Mm-hmm. Mm-hmm.
even though my property value is over $1 million now
Wow.
because I bought 30 years ago. So
That's such
technically, I'm paying half the property tax
a,
compared to my value. But if you bought my house today, let's say I'm just
mm-hmm.
throwing a number. Let's say it's 1.5 million.
Mm-hmm.
You would be paying $15,000 in property taxes
Wow.
versus I'm paying 5 or 6,000.
Mm.
So that's a great protection. One of the best propositions that came out. This was the Howard Jarvis proposal that came out. In fact, tomorrow is the election, and there's a ballot on the or there's a proposal on this ballot
Mm-hmm.
where one party is trying to get rid of it and one party is trying to keep at it.
Wow. That's crazy. I don't
I
know
did not
anything.
vote on it. I sent in my vote my ballot today. I dropped it off. I
Uh-huh.
did not vote on that particular ballot because sometimes when you say yes, it's actually a no, and sometimes a no is a yes.
This is true. Yeah, that's
It
true.
happened last time also in 2022. Same thing happened because when you're saying yes, you're saying no. So I stayed away from it because I was not well versed. I
Yeah.
should have.
Oh my
But
goodness.
going back to the expenses,
Mm-hmm.
property tax is one of those. So in
Mm-hmm.
Texas, if you can explain to me, because ours is fixed, I'm surprised how bad are your property taxes for, let's say I buy a brand new home, for example, or I buy a house that's 30 years old, and the seller was paying 3,000 a year taxes, and if I buy it for 800, how much other taxes? How do you work that?
Yeah. So you do have a homestead protection here, but it's basically it's based on of course, the taxable. So they can raise their value as much as they want. They can just raise it. They can double it in 1 year if they want to. But the taxed value, that's what has a cap. But the issue is it's not like what you're saying about it's a percentage, and I think it's like 10%. And so if you're owning $1 million house, a 10% cap really isn't helping you that much.
No.
If you think about it, but if you own a $200,000 house, then it would, but then every year it's just going to keep going up every year
Right,
because
right,
they've already raised the value of it.
right.
And so it's very hard. And buyers of new construction, a lot of times they really get hit hard by this because when
Hmm.
they buy, and the other thing is you have no protection the
Hmm.
year of acquisition, right? So if it's valued at 300,000, it bumps up to 500,000 based on what you paid for it. You don't have any protection from that. Okay.
Okay.
Whatever they decide that year is, and you can protest it, but basically if you protest it, they're going to say, what'd you pay for it? Right.
Okay.
And if you tell them what you paid for it, they're like, hey, you declared value when you agreed to
Oh, that's how they go. Right.
declared value.
Yeah. Yeah.
And so you're not going to, yeah. So, and new construction buyers, oh my goodness, they really get hit hard because a lot of times when they buy, the house is still based on land value.
Right, right. Cool. I was talking to an agent a few weeks ago, actually online, not personally talking, but we were talking via Zoom or in a mastermind group or whatever. And one of the agents was mentioning that either in San Antonio or Austin, somewhere near there, in one of the suburbs, there's a new community which was worth, it's about 7-8 years old, but about 4 or 5 homes sold for $800,000 value on average, right? And the community is about 400 homes. So now what happened was the assessor in that county or that city increased the value of all the homes in there. So they're all paying higher taxes. Is that the scenario, or am I hearing something different? Or
as long as it's somewhat remotely comparable, they'll do it and they'll get away with it. The problem is most homeowners don't know what's comparable and what's not. And so the appraisers, oh my goodness, I protest every year. I protest ours and our rentals. And I look at what they will tell you what they're using, right? So they will identify on a list what they're in. And I look at it and I'm like, are you out of your mind? I mean, this year they used one from 2022. And I was like, how are you using that from 2022 to 2024? And I called them on it and they're well, they had some reason for it, but okay. The appeal process, it's hit or miss. I mean, a lot of times, like you'll give your case, and then the county will give their case and they go with the county a lot of times. So you're not,
Yeah. So I think boiling it down, I think property taxes nationwide is a big issue, and property tax, you can't get away with it. You have to pay it. If you're late, they charge you more penalties and penalties. So I think that's one of the reasons that homeownership is becoming expensive, especially for seniors who are on fixed income. I mentioned Florida earlier, and we'll talk more about Florida. One of the things that's happening in Florida is obviously one is that the home prices have gone up from, like I read a report last week. The average or the median home price in Florida was 220 in 2020, and now it's close to 400 or 415. And just like Texas, they can increase. So their property values have increased, but all the owners who bought the homes 10, 15 years ago, especially the ones who are on fixed income, now they have to pay the increased property taxes. And even if it's just 300, 400, 500 more a month, it's very significant.
Sure, absolutely. Here you do have options. They do protect the senior citizens to a degree. You have a special exemption, and you can also freeze the value. And I believe it's only for the school tax portion, but that's the highest amount. You can actually freeze it, which can really come back to bite the buyer. When the buyer comes in and that house has been frozen in value for 5 years, and they buy it, and suddenly their property taxes will double the first year.
Right.
So you got to be really aware of that. But so senior citizens do have a little bit of protection here in Texas.
Right. So we're going to talk about inflation in a minute, inflation and, the homeownership cost. But I wanted to ask you about when you buy a new home, how is that valuated versus a regular home in Texas specifically?
Right. So, and that's a very big point of contention here, because a lot of times they are only valued at land value at closing. And then within that year, the county catches up and goes from a $50,000 value to a $900,000 value. Right. And so if your escrow account is not set up correctly, the owner's going to be devastated. And guess what? Even if it's set up correctly, the owner's still going to be devastated, because what happens is the builder doesn't pay the correct prorated amount. They pay their amount based on the land value. And so then somewhere in between, by the time the tax bill comes out, well, now that, the taxes are $40,000, and, maybe the builder only paid like $3,000. And so suddenly, even if your escrow account is set up correctly, you still have a huge escrow shortage. So with new construction, it's quite a trap. Like, you have to be very aware. You have to just know it's a given. You're going to have an escrow shortage the first year.
Wow.
You just have to know.
Is this pretty common? Is this common? Do the buyers know about this, or?
Well, if they watch my videos, they do. I talk about it a lot. I'm like, you guys need to know this happened. We go through all of the builder contracts, and I show them each, right there. See this right here. They're going to, so basically they only pay property taxes on the value at the time of closing. Right. And so that's just another way that the builders make a profit, is that they only pay on a $50,000 value.
Right. Well, it's
So,
pretty amazing because you know, and I know as realtors, we know that when homeowners buy, whether their first home, second home, third home, most of the homeowners have depleted most of their cash between the down payment, closing costs, appraisals, moving costs, buying new appliances, buying new sofas, new home excitement.
hmm
When the tax bill comes, they got zero in their account. So how do
yeah,
they pay for that? What's
I know. Well, if it's escrowed, of course, the mortgage company is going to hit you with an escrow shortage. They're going to raise your monthly payment, but you don't have to come up with it all at once,
right?
right?
I mean,
Your
that
just
adds up.
payment's going to go up. But the buyers who really have it bad, and this is not supposed to happen. This is
Mhm.
illegal.
Right.
The buyers who really have it bad are the ones who are qualified based on the land value of the property taxes. And so they'll look at the loan estimate, and the builder affiliated lender will approve them, showing that the property taxes are going to be like 150 a month.
Right.
All right. Well,
Okay.
guess what? In Texas, property taxes are never 150 a month. Okay, they're always, for new construction, they're going to be like 600 a month.
Right.
So I've absolutely seen, these loan estimates where they were approved, and then the closing disclosure where they were approved based on
Mhm.
property taxes being 150 a month. Well, guess what? They're
Right.
not going to be. They're
Right.
going to be 600 a month. So immediately you have these buyers who are,
Right.
hit with an extra $500-600. I don't know how we don't have more foreclosures with this going on.
Yeah. Right.
So it's astonishing the way the payments go up.
Right. That's significant. Yeah. So let's
Mhm.
move on to the next big subject that my personal feeling is, and based on reading on reports, is obviously one of them is the property tax is a big one in certain
Mhm.
states. In California, it's not that bad of a situation. But
Mhm.
if you look
Mhm.
at overall, property tax is a big issue. The other issue, for example, specifically at Dallas, Florida, California, a lot of
Mhm.
the states have high insurance cost.
Yeah.
In some states, California, some of them have doubled and tripled. Florida, I've heard stories where it has quadrupled.
Yeah.
So, so the other factor and the other reason why homeownership is becoming very, very difficult, even for owners like myself. I've been here 20 years, and imagine me paying 2,000 a month in insurance, and then it jumps to 10,000, which is possible. So I'm crossing my fingers. I'm supposed to get my policy again renewed next month, and I have my insurance with State Farm, and I
Uh-huh.
know that last year State Farm, Farmers Insurance, AAA, they were not taking any new policies,
Mm-mm-mm.
and to reduce their risk, and they were getting more money from the existing policy owners, which includes me. So I'm keeping my fingers crossed that it may double, but hopefully not triple. Are
So
you
what?
seeing that in Texas and other states, or have you heard about this situation?
Well, just out of curiosity, how much do you really pay 2,000 a month on insurance? Like, what
Not
do
a
you?
month. I think it's for a year. I think
Oh,
I know
okay. I was like,
6,000 a
oh
month.
my
No.
goodness, that's terrible.
On my home insurance, let me clarify. On my home insurance, I don't pay 2,000 a month, but I
Mhm.
bet you if I look at auto, health,
Yeah.
life insurance, I probably pay 3 or 4,000 a month in insurance.
Yeah.
It's
Yeah.
ridiculous. Yeah.
I
Yeah.
think I think we pay like 500 or 600 a month on our home insurance
Right. Oh,
alone.
that's
Um,
significantly high. Yeah.
it's very high, and all of just homeowners insurance in general has just changed. Like now they're just doing all these different ways to save money. Like it used to be you got a certain amount of coverage, for a certain price. And then suddenly they're like, well, now it's not a 1% deductible, it's a 2% deductible, but we're going to charge you the same amount.
Right.
So they have
Exactly.
all these ways. And then also, I think they really have cut down on customer service. We have USAA personally, and
Okay.
we had a claim this year, and it was horrendous. I mean, it was, and I'm very comfortable handling an insurance claim. We hired a public adjuster. They were
Oh,
being so horrible, and I was like, I know how to do this, but I am just fed up. I am
yep.
tired of this. So we just got a public adjuster out there. He did a great job. But
Right.
it's just so the customer service element,
Yeah.
that is where it's almost like they're just afraid to write checks.
Wow.
There's got to be issues there. And
Right.
and I was like, well, maybe I'll, file with BBB on them. And then I looked up and they had so many complaints. I was like, they're not even going to care
Right. Wow.
because it's just one among hundreds.
Yeah. Yeah.
Um, so yeah,
Yeah.
insurance is up. And of course, here in this area, we're like the hail capital,
Right. Yeah.
um, so it's going to be a little more costly. It's interesting how county by county there are differences here, because
Right.
some counties just within Dallas Fort Worth,
Wow. Yeah.
some will be much less expensive than others, depending on like the average amounts of time they get hail.
Right.
You
Wow. Yeah. Yeah.
Mhm.
I'm going to read some stats again from the report that I saw on YouTube.
Mm-hmm.
I'm going to read some insurance costs so they know what they are. It says here that escalating homeowners insurance cost. The average annual insurance rate rose from 1384 in 2021 to 2377 in 2023, almost double in insurance,
Wow.
which I think is going to double if much faster in the next year or so, with projections reaching 2,500 by 2024. But I think if you look at average by 2025, it's going to be much higher.
Yeah.
Here's another stat that they say is that the natural disasters contribute to rising insurance premiums. We talked about Texas, you got all those hailstorms and rain.
Right.
California has the wildfires.
Mm.
Florida has all these
Hurricane.
hurricanes. So
Yeah.
those are the reasons. And we understand the insurance companies have paid up billions and billions of dollars, but we're paying the price for it. The other issue they talk about is that major insurance are withdrawing from high risk areas, with Florida seeing the highest average insurance rates around 11,000 annually.
Wow.
And
Mm.
like I said, I did a report. It used to be in Florida, the average annual insurance rate was about 3 or 4,000. It has quadrupled in the last 3-4 years to 11,000. And
Mhm.
I was reading another report, and this will surprise you or the viewer, is that one of the reasons insurance cost is going so high, nobody would think about. Could you guess what it is, Wendy? It's way off the charts why the insurance costs are going up,
I have all
especially
these
when the
thoughts in my
disaster hits.
mind. Uh-huh. I have all these thoughts in my mind, but you tell me.
Okay. One of the reasons is because when a wildfire hits, and you're talking billions of dollars in damage,
Right.
when a hurricane hits like Helene and Ian and
Mhm.
Milton just hit,
Mhm.
you guys have rains and storms.
Sure, absolute.
There's scammers out there, and there are thousands and thousands of claims which are fraudulent claims.
Mm.
And I heard reports of billions in dollars are pushed out to these guys in fraud money. And guess who pays for it? You and me pay for it. So
That's
that's another reason home insurance is going up, because of the scammers, and they get away with it. Look at COVID. How
Mm-hmm.
many people took PPP money and other money
Right.
that's fraudulent?
Yeah. Yeah.
And we as consumers, as homeowners, as home buyers, we end up paying for that.
That's an excellent
Um,
point. You're right. And I hadn't really thought about that. I
yeah,
had in my mind how really inflation is like double faceted, because on the one hand, prices go up, right? And your coverage is based on rebuild value.
mhm,
And so on the other hand, all of the price of materials goes up. So you're not just getting, hit because home values have gone up. You're also getting hit because it just costs a whole heck of a lot more to rebuild your
right.
house.
Yep.
And so, you've got two different elements there going on. So
Yep.
it's no
Yep.
wonder. Mhm.
Yep. So let's move on. And the other thing I want to discuss is obviously there's a lot of reasons, but we could take in some of the major reasons why costs are increasing for the homeowners, existing homeowners, and if you work with a lot of buyers, so you can
Mhm.
explain to them, hey, when you buy a house, expect higher insurance costs maybe in a couple of years, expect more property taxes in a couple of years. So you have to prep them, because we want
Yes.
our buyers to be happy when we sell them home. I know people say you want to sell them home because we make commissions and all that, but we won't go there. But we really want our consumers, our buyers, to be happy. We want to give them all the information. One of the things, again, going back to Florida, I mentioned earlier, we'll talk about Florida. So because of these natural disasters that happened, because of that Champlain towers that dropped,
Mhm.
the collapsed in
Mhm.
near Miami. There's new regulations about restructuring and investigating on a property, on the condos. So you have these 100, 200 story, 10, 15 story condos with 100 condos or 300 condos. Now they are slapped with higher association fees.
Wow.
And the association are increasing for two reasons. One is because of insurance, because just like a homeowner has to pay for the insurance, the condominium complex, the property management company, has to pay for the fire insurance, the disaster insurance. So
Mhm.
because they increase their insurance and our insurance, the property management and HOA increases the buyer's insurance. So that's another increase. So
Mhm.
that increase comes in the homeowners association. Are you seeing any significant increases in HOAs due to disasters or insurance or other reasons?
Condos do not have a big presence here. I mean, you've got
Oh,
some pockets areas of condos. You've got a few pockets areas, and you've got these areas that are very much more like career oriented, singles oriented, right? But then you're mostly predominantly populated by single family homes with, all crammed together, but not condos. And so you're not going to see that element as much because the HOAs are not having to pay, for
Right.
like what you said, fire insurance. So I
Right.
wouldn't say as much, not nearly as much of a factor here.
Okay. Let me try to upload something while we're waiting. So hold on,
Mhm.
just not a share
Mhm.
screen, but I'm gonna do this off the cuff here.
Go for it.
Let me see. Not share slides. My computer. Hold on, just a minute. I'm doing this. Let me see here. Florida. Oh, I won't be able to load it because it's not in a PDF. So let's cancel that. What I
Mhm.
was going to read out was this Senate bill. I think it's Senate Bill 152 or 154. Don't quote me on it.
Mhm.
But after the collapse of that building, where a lot of people injured, a lot of people died, there's a new Senate bill out that all the condominium structures, high-rise structures, or condominium complexes, they have to have their whole building inspected
Mm.
and registered and make sure it's up to code and have some reserve funds.
Right.
And I was talking to another realtor last week again, and they said there's a couple of towns near Tampa, Florida, northern Tampa or north of Tampa,
Mhm.
where the assessments are so high because now, because of these new regulations, they have to do this and do that and have reserve funds, which are a lot. All HOAs have reserve funds, right? But these
Mhm.
reserve funds are significant. It was so high that some of them are slapped with 20, 30,000 per homeowner per year for the first 1 or 2 years to come up. And this is a major disaster happening in Florida, especially with these huge complexes, especially with the older complexes. So all this is
Goodness.
adding to the cost of home ownership because the property management company, as we talked earlier, is slapping insurance cost to the HOA, and the
Uh-huh.
HOA, if you were paying $200 a year, is now $700 a year.
Mm.
There was
Wow.
a report on the news on CBS. I saw there was this lady, 70 years old. She was interviewed on TV in Florida. She said, I'm 70 years old. I've lived in this condo for 20 years. I'm on fixed income, and my
Right.
condo alone has gone to $2,000 a month.
Oh my goodness.
And she said she's leaving. She can't sell the house because now, as you know, there's a lot of vacant condos there. A lot of
Mhm.
condo prices have dropped because nobody can qualify for the high $2,000 a month association fees. And
Yeah.
that's one condo complex. It's not all. I'm just generalizing.
Yeah.
I'm not saying that all condos are bad. So if you're in Florida, don't get upset or anything.
Mhm.
I'm just saying that in general, prices have gone up and that affects the buyer's qualification.
Absolutely,
A
it
lot of
does.
condos are sitting there. And she said, if this doesn't sell in 2 or 3 months, I'm not making any payments. And if they kick me out, I'll kick out.
Oh, wow. So
Sad
they're
story, but these are true stories because
foreclosure.
of price increases.
Yeah.
And these people are on fixed income.
Yeah. So they're essentially upside down due to these rising costs because you're right. Factored into affordability are all these other costs. It's no longer just about getting your mortgage. That's just a
Mhm.
small piece of it. You've got all of
That
these
is
other pieces that add into it.
right.
Wow. That's such a
Well, the
tragedy.
good thing is, I know we kind of talking negative and all that, but the good thing is all these homeowners who've been there, so let's say 5, 6, 7 years,
Mm-hmm.
their home prices have gone up significantly. Like I mentioned earlier, Florida was in 2020, 200, now it's 400. It's doubled. Guess what? You got a lot of equity in the house.
Right.
So luckily, this lady can do a reverse mortgage, or she can take a second
It's a good
loan or
point.
borrow against it, do whatever. But
Mm-hmm.
please stay there, have a roof over your head, have a community, be happy. If you have to start the mortgage payment and refi or do something.
Sure.
But the good news is of all the things, um, the equity is significantly high and it's still going to go higher in certain areas. I know Dallas, you mentioned that it's
Yeah.
still prices are going higher and that means equity will go higher.
They are, but they're mostly stable. Like we had a real unnatural increase, when rates were so low. But as soon as the rates came up, we saw a very rapid stabilization. We didn't see a crash. I think a lot of people hoped for a crash. But instead, what we saw was a return to the natural level of growth. And I was glad to see it. I'm like,
Mhm.
don't go bringing back those 3%. It's bad for the housing market.
Right.
Um, so we did see an acceleration between 2020, 2022, and then we immediately saw things level off and they're just kind of inching up. So we had a slight decrease from 2022 to 2023. an even smaller decrease from 2023 to 2024.
Right.
Uh,
Right.
that's not
Okay.
seasonal, that's year over year. So
Okay. Right.
seasonally, we see it by about 9 to 10% every year,
Right.
seasonally.
Okay.
And year over year, June to June, right?
Right.
We're not seeing any kind of rapid decline. So
Right.
seasonality
Okay.
is really where you're going to benefit
Mm-hmm.
if you can. Not every people can. Sometimes you got to buy when your kids are out of school. You know, you have a
Right.
choice.
Right.
But in Dallas, if you can take advantage of seasonal price drops, man, absolutely do it.
Absolutely.
I routinely tell my buyers don't buy. If they're coming to me in June and I'm like, do you have a choice? Yeah, I have a choice. Let's wait. Talk to you in
Right.
November, you know?
Right. Yeah, it's seasonal. So yours is still seasonal. Yeah. How is your inventory doing there? Because inventory leads to prices as well, up or down.
The funny thing about that, and I just did a video about that, about this fallacy that we have this huge housing shortage, because I'm so tired of hearing that. Dallas has a lot of inventory, a lot of new construction inventory. I know it's in the excerpts, right? So, I mean, if
Mhm.
you're working remote, you can take huge advantage of that and get a pretty good deal, pretty good discount, because you've got a lot of builders that are exposed.
Mhm.
And then when you go in and you've got more landlocked areas, you still have high inventory. Dallas, I think, has seen like a 35% right now increase in inventory. So
Okay.
you've got some areas that when they're close to good corporate, going to mean a short commute, you still have some high demand areas. You've got these pockets because everything's micro local, you know. So you got
Right.
these pockets that are still in high demand, but you've got plenty of areas where you have these pre-owned, pre-owned home sellers who are desperate right now. And then you've got the new construction. I don't know. Did you read how much DR Horton's stock dropped this past week?
I have not. I saw it a couple of weeks ago. I thought they were doing well.
No, man, they released their earnings and they had like a 15% drop in their value. So and DR Horton is here in
Yeah.
Spain. So
It's one of your bigger builders out there, right?
yep.
Yeah.
I mean, well, we have so many builders, but
Okay.
Bloomfield is actually our biggest. But
Okay. Yeah, we don't
yeah,
have Bloomfield over here, but I know we've have
yeah.
DR Horton and they're nationwide and they do pretty well. Uh,
So that was a
so
long-winded answer, but yes,
right. No, that's understandable. Yeah.
we have high
Yeah.
inventory here. So
Right. Now, if you were to project, and I did a video last week and I said that, according to the reports made by MBA, Mortgage Bankers Association, the Fannie Mae, Freddie Mac, um, National Association of Realtors, the average, if they look at all their predictions, some were 6, some were 5, some were 2, the average national prediction next year is about 3.6%, but it's almost 3% until 2028 on average.
Oh, I gotcha.
So what they're saying is 2024, the prices are going to be up 4.7% from last year,
Okay.
which we're saying already in Orange County, we've seen a significant, but this is a national figure. But
Mhm.
moving on, 26, 27, 28, including 25,
Uh-huh.
on average, they're going to go up about 3.2% per year, which is
Interesting.
almost 20% from today.
Yeah.
So my
Yeah.
house will be worth 20% more, which is a lot, but my
Wow.
property tax won't go that much up. But so I'm happy
Yeah.
about that.
I mean,
Right.
you've got to take that into consideration.
Right.
Here, year over year, we saw an increase of like 0.02%. Right. So
Oh,
if they're projecting 3%, that's not what Dallas saw. We saw like 0.02%. So again, it's not a crash, but it's sure
no.
not, it's not even really what I would consider like traditional,
Right.
appreciation. It's
Yeah.
definitely much more, refined and
Right.
mellow.
But remember, these are national figures. So, some cities might be 10%. I'm sure Iowa and Montana and some of the North Carolina, South Carolina, a lot of
Mhm.
people are going there. I'm sure they have significant increases. And so it averages out. So
Sure.
that's an average. If I
Yeah.
had to guess, I know Orange County probably went up 7-8%. If the national figures are 3 or 5%, Southern California was much
Right.
higher. It's
Yeah.
always higher,
Yeah. Yeah. That
uh,
sounds about right. Yeah.
which adds to the payment, right? Which adds to your payment because as home prices go up, your insurance goes up,
Right.
your property
Yeah.
taxes go up.
Uh-huh.
And then the next thing I want to talk about, which a lot of homeowners have a struggle with, especially the homeowners who've been around, like myself. I've been
Mhm.
here 25 years.
Mhm.
You got to fix the fence, got to fix the roof, got to
True.
fix the bathroom. So one of the things that's happening now is a lot of people, when of course, I don't have to change my windows if they're old, but if I have a bathroom leak or a faucet leak or dishwasher breaks, I have to buy it.
It's true.
And I don't know about your area, but have you heard of homeowners struggling to buy things like that, the 2x4s and the paints?
Oh
How
yeah.
significant are the maintenance costs just to maintain it? I'm not talking upgrading. I'm
Right.
not saying, hey, put a brand new granite or brand new. I'm talking about, hey, my faucet's leaking, I gotta fix it.
Yep. We actually last week replaced. Now our house was built in 1990, right? We call it the money pit, and we are absolutely spending so much more. And you're right. It's we just I think it was last week we replaced 4 faucets. 4 bathrooms, 4 faucets cost us over $1,000 for
Yep.
faucets. And it was just blew my mind because I knew that prices had gone up so much. I was like, it never would have cost that much.
Yeah.
Years ago. But yeah, when you've got an older home, all this, I'm looking at these faucets going, man, they're probably original
Yep.
to 1990. They're just now going out, and it is definitely
It's
the cost.
expensive. I've had my gardener for years. My gardener, I've had him for as long as I've had my house. Tony, real nice guy. He was there with the previous owner. So he's been at this house, I don't know, 40 years. So 3 weeks ago, one of my sprinkler heads were broken. So I say, hey, Tony, can you fix it? I'm at work. So
Right,
he
yeah.
goes to Home Depot, buys it, fixes it. I got a bill for $25 for one sprinkler head. I remember paying $5 for it 7-8 years ago.
Wow.
$25 for one sprinkler head. I'm sure he had that in the car. He told me he went to Home Depot. I don't know.
Wow.
But what I'm saying is a one sprinkler head, which cost $2, I paid $25 because he had to go to Home Depot. He had to come here, turn off the sprinkler system, put it on, make sure it works. And I have a lot of sprinklers to be changed.
Sure.
In fact,
absolutely.
I haven't changed my sprinklers in 10 years. I got to change the whole thing. I'm scared to get a quote because it'll be in the thousands and thousands of dollars. I'm just going to leave it like it is.
Yeah.
You know,
it will.
So what we are getting at is becoming a homeowner. It's a dream of everybody to become a homeowner. I hope people buy homes because that's the fastest way to become rich, right? Because of your home appreciation. If you're renting, you're going to stay where you are profit-wise, your net worth-wise. If you buy a home, every year you're going to improve or increase your equity.
Right. Yeah.
So the good thing is when you buy a house, you become rich over time. But in the meantime, as you're getting rich, you have to fix the faucet. You have to fix the fence that's falling down and the neighbors complaining. You have to cut those trees. You cut a tree today over here, it costs you $1,000 just to trim them. If you haven't trimmed in a year, 2 years.
Right. Yeah.
So I wanted to talk about if somebody's a new home buyer, let's say I'm a new home buyer, what are some of the costs that I have to anticipate buying? And let's say I'm not buying a brand new DR Horton home. I'm buying a home that's 30 years old in Frisco or Makina or Plano or somewhere out there that's older. What should I keep in mind the next 3, 4, 5 years I have to maintain that may cost me?
Oh my goodness. Well, here in Dallas, I wonder if you guys have this in California, Florida. I don't know if they have this there, but here we have foundation problems. And your older homes are just horrible with this. And so your landlocked cities, really bad in cities like Plano. You've got it really bad in South Arlington. There's no fixing them. All you do is keep spending money on it. And I always tell my buyers, please do not buy homes with foundation problems. They're just not fixable. So we see that a lot. And it's just once you have a house with a bad foundation, it's going to cost you, always. And you can't fix it.
Right. Okay.
So we see that a lot, definitely, for sure. And then if you've got your cast iron plumbing, right? By 1960s home, you've got cast iron plumbing, that's going to give out on you. So yeah,
okay.
The houses, the more you've got. So.
Right. Okay. Well, you know what? We got an inquiry online. I just saw it. I don't know when it came in. So maybe I'll let you answer that. Wendy, I'll read it out for you. He's asked 2 questions. First of all is that he's saying, and I'm assuming it's he, could be she, it's Eswer is the name. I say year-over-year insurance, maintenance cost, and property tax amounts are increasing in Dallas.
Very true.
House costs also increasing, though the inventory is increasing in Dallas. That's his comment. You want to say, in case he's listening, you want to talk to him via.
Can you post it so I can see the comment?
Can I post it?
Yeah, like put the comment on the thing so I can see it.
Oh, how do I do that? Okay, sure. Okay, there you go.
There we go.
Okay,
cost and property tax amounts are increasing in Dallas. House costs also increasing, though the inventory is increasing in Dallas. Yes, and I can tell you, I mean, it is true, but remember what I said, it's very nominal, right? We're not seeing a big crash, still kind of going up, but we're not seeing it like we did. But I'll tell you what's happening is that your new construction builders, they will do anything not to lower the prices. And so they're giving away these huge 3-2-1 buy downs, 2-1 buy down, forward commitment. Oh my goodness. When they do the forward commitment, that costs them like 25 grand, but they're able to hold the price up. And so you're not seeing this big drop in price, but the profit of the builders is definitely not what it was. And new construction is huge. You'll hear me talk a lot about that just because it's such a huge component of this whole area. So they are, to a degree, you could almost say they're propping up home values with, I mean, we all know affordability and interest rates and home prices, they're all linked, right? So if they can create a pseudo 4% interest rate, people aren't going to have any problem paying a higher price. So if that was your question, Eswar, that hopefully kind of answers it. Is just we're seeing new construction has such a huge component, and we're seeing those rate buy downs. So
okay. He also had another comment. I don't know if you want to answer that, but I'll answer it too. Go ahead if you can see it. I can see it on my screen.
Yeah. How about investing in S&P instead of buying second house? If you're talking about making it an investment property, it depends on your location, but I can tell you right here in Dallas, I very highly discourage it. We won't even work with investors because I'm not going to help you into a non-cash flowing product. And when you've got high prices and high rates and high HOA fees and and a lot of these out-of-state investors, they don't know about property taxes. They just expect it to be low from where they're at. And here, except for like right now in the short term, we have a cap on values. But typically investors, you could literally have the price double in 1 year. So I guess that's me saying S&P 500, especially if you're thinking about Dallas. I just really, now we've got rentals from the glory days in 2007. But I really would not recommend them here. You're not going to find a cash flowing instrument unless you're all cash, so then you've got your cap rate isn't great. So
cap rate is low. What's average cap rates? Are you over 5, under 5?
It really, of course, is such a personal decision, but we choose not to work with investors. So I'm just not as into that. I'm very data driven, but I'm data driven for owner occupants.
Right.
Because I think, like you said earlier, I think your home is an investment. It's a piggy bank. You don't want to overpay if you get upside down, which that's a whole other topic. But here in Dallas, it's extremely easy to overpay.
Right. Okay.
And so from that standpoint, though, being careful as an owner occupant, but I don't really recommend the whole second house as a rental.
Right. Any comment on, just to continue, because Eswar is probably, and I hope I'm pronouncing the name right. What about investing in S&P? Would you go there, or you want to talk about it, or stay away from it? Just saying, hey, don't invest in a second because of cash flow in Dallas. What about investing in S&P? Any experience there? Or you want to talk about that, or?
Not really. No. I've been a real estate girl since 2007. So that's really where my specialty is. So
great. Same here. I mean, I've invested and I have some stocks, but as far as giving advice and things, I'm not licensed, so we'll stay away from it.
Yeah, exactly. Yeah.
But if you need to talk to somebody else, I know great financial planners personally that I use, or I can find you some in Dallas. I have a lot of friends in Dallas. I come there at least once a year minimum, sometimes twice a year. So I've got a network there as well. We can refer you to not only realtors, you got Wendy to connect to if you want to, but we'll stay away from answering on those questions. But on hindsight, I have invested in S&P and other stocks, and like real estate, you can go wrong if you invest long term. You buy a house, doesn't matter what price. If you're investing for long term, you can go wrong. Same thing with stocks. On average, if you buy and gonna hold on for a bit, then you'll be okay. But talk to your financial planner. So we'll leave it at that. So
yeah. And
so
I would
say, moving on to Texas, I want to bring up something more important that affects every homeowner, new or old, especially towns like Dallas or cities like Dallas or Boston. My friend, he's been on my guest, Praful Tucker. He's in Boston. He always complains about the frozen winters and the high heating bills.
Yeah.
So what I want to talk about is, yes, property taxes go up. Yes, insurance prices go up. Yes, condo prices go up. We talked about maintenance and 2x4s and paints go up. Let's talk about utilities. Electric, gas, water, Hulu, YouTube channels, TV channels. How significant are those when you want to maintain a home that you've been there and all of a sudden all this thing goes up.
Yeah. Yeah. And you're talking about Texas, where we
Texas and in general, right?
yeah,
Especially Texas.
yeah. Now we have we have a pool, and our house is about 4,300 square foot. And during these summer months, our electric bill routinely is well over $1,000 a month, and our water bill also over $1,000 a month. So
A
utility.
water bill $1,000 a month.
Yeah, well, we have a pool, so yeah, so that really runs it up. But yeah, so those are huge expenses that if we see an electric bill at about 600, we're happy. That's a
Mhm.
bargain.
Right, right. Okay. I just want you to read this also, Wendy.
Oh,
So,
look, Esmar watches my videos. That's so awesome.
yeah, isn't that cool? So that
Very
was good. Thank
cool.
you for watching. Appreciate it. Yeah. We
Yeah.
do this for you guys, so even if we don't have a lot of viewers, I don't have 1,000 viewers, I'm a new channel, but even if it's a few viewers, we appreciate it. We appreciate your comments,
Hmm.
and we are here to help you answer any questions to the best of our knowledge and experience and what we see and anticipate. So
Hmm.
let's get back to those utilities.
Yeah.
That's pretty high. Water bill, electric bill.
Yeah.
My Spectrum bill just went up 30% in the last few months. It used to
Yeah.
be $50 and now it's $80.
Hmm. Hmm.
um, So how
Yeah.
significant is that when you sell a home to a buyer? Do you talk about utilities at all, or leave it to the lender to talk to you? Because it is something that they don't anticipate, right? And then they.
Yeah, I think so. And especially if they've been in an apartment and then
Mhm,
where they didn't have to pay for their water. And then
mhm.
they're buying a home. And also, like, all the new construction here always comes with a sprinkler system. Um,
Right, right.
that's one of the things. Even if it's like a cheap home, they give you the sprinkler system. They may not give you an automatic garage door opener, but they're going to give you that sprinkler system.
Yeah,
So I think that a lot of times they don't expect that, how much
right,
that's going to. I always tell the buyers, spend below your means. It doesn't matter what they're qualifying you
right.
for. Spend less than that, and then check out your loan estimate to make sure that what they're quoting you for taxes and insurance is actually accurate, right? And then spend less than that, because I promise you it's going to cost you more than you think, so
Right, right.
yeah. Mhm.
Okay.
Especially
Right.
in Texas. We have about 6 months, of heat. Like right now we're hitting on November 5th today, and our air conditioner is still running. So
In November, and
yeah.
it runs all day, so that adds
Yeah.
up.
Yes, absolutely. It's not 110 outside. We see that in August, but it's still pushing 90. Today we had rain all day, and it was still, the air conditioner was running because it was really humid.
Right,
So
right.
yeah.
I wanted to touch about, because we don't have a lot of issues like you do, states like Texas, Oklahoma, Florida, where there's a lot of rain, a lot of hail.
Hmm.
How often do you do the roof maintenance, roof repairs? How is the roof cost going? What it was 3, 4 years ago, and where do you see 4, 5 years from now? If I'm buying a house in Dallas, especially an older home, because I want a big yard and I want a rural setting, I buy an older home.
Yeah.
How
Yeah.
significant are roofs or fences and things like that?
Right. Yeah. Well, I'll tell you what, we had some glory days several years back, maybe 5 years ago, where basically any roofer would charge what the insurance company would pay. And then they would come to your door and say, I'll charge whatever insurance will pay, and I'll discount you the price of the deductible. And
Uh-huh.
so, perpetually, Dallas homeowners never had to pay for a new roof. Never, because
Hmm.
you would always have storm damage, always,
Right.
wind, hail, storm. And then the roofers would discount you the deductible. Well, the insurance companies caught on to that. They passed a law. Now you can't do that. You actually have to pay your deductible. But still, I would say it's very rare to
Hmm.
actually spend money to replace your roof beyond your deductible.
Okay.
Almost always there's hail or, wind damage. After thunderstorms, you got your roofers going door to door. They know the neighborhoods that were hit the hardest.
Okay.
Knocking
Right.
on your door saying, hey, can I take a look at your roof? You probably got an insurance claim here.
Right. Right. Okay. Cool.
Yeah.
So as we end, we got about 10 minutes or so. We can go more if we have to. But what I want to touch upon is we give them a lot of bad news and we're the bad guys here. Hey, property X going up. But we
Yeah.
want to give you that for information so you're prepared. We don't want you to spend half your check, like in LA right now. And you may know as well, 40 to 50% of the newer consumers, newer home buyers' checks are going towards rent or
Mhm.
house and mortgage. 50%. That's a lot.
That is
So
crazy.
the question is, what are the options for struggling homeowners? And I'm going to read out this report, and here are some of these sites you can go to and say, hey, you know what? I want to dispute my insurance. I want to dispute my property tax. Even if you can save $100 a month if you're on an escrow payment.
Mhm.
So some of the things you can do is you can go to your county assessor's website. They may provide tax relief resources. I'm going to read them out, and if you want to talk about it, we'll talk about it.
Mhm.
The other source is the Consumer Financial Protection Bureau, which is the CFPB, suggests contacting HUD for potential assistance. So if you're struggling or if you need some help, housing and urban development, that's HUD, right? Housing and urban development. You can always Google them. I think it's HUD.gov or HUD.org. You should be able to find something there.
Mhm.
Mortgage lenders may offer repayment plans or loan modifications for
Yeah.
homeowners facing hardship. We saw that in 2005, 6, 7, 8, 9, 10. And that's a good idea for that lady that I talked about in Florida, 70 years old.
Mhm.
Loan modification, where they can give you a 40-year loan or drop the rate to 2%. And this may be
Right.
good for her.
Yeah. Yes.
Yeah.
Yes. Yep.
So that's another source. The next source is homeowners are encouraged to compare insurance options as rates and coverage vary significantly. So if you, like in my case, I'm getting a homeowner's insurance coming up, I should start checking out and check with Farmers or AAA or Mercury or Cobra Insurance and be ready.
Right.
So those are some of the things you can do. You want to talk about any of these points, or you want to add to any of these where they can be prepared or anticipate some help from somebody?
I love that you've gone there. I love that you've taken the time to look that up because people do need the help. And I just think that's excellent.
Yeah.
During COVID, almost every single loan type allowed loan modifications.
Mhm.
So I think, it's a great thing to consider and to pursue, if it's out there, because it can't hurt to ask, so I
Yeah,
do.
as long as you have hardship, right? The number one rule of loan
Yeah.
modification, you got to prove hardship, which is financial or
Mhm.
medical, or I'm assuming natural disaster is a hardship, because I know
Right.
in California, the town way up north, the town of Paradise, the whole town got wiped out. That's a hardship.
Oh, that
They
definitely
don't
is.
have a house, but to rebuild, I'm sure they're getting loans from FEMA and all those.
Right.
And I'm sure a lot of people in Florida or uh, the people who want to fix, they're getting loans. The business that are closed down, the restaurants that are shut down, they have to fix the windows and clean the toilets and the flooring. I'm sure they're getting loans, but it's a slow process.
Right.
And it may take 4, 5, 6, 7 months to repair and start the restaurant or shop or whatever you have. So it is a disaster, and these loans will help.
I think a big thing is just buy below your means. Anticipate that these expenses are going to go up, and whatever the lender tells you you're qualified for, check the numbers, make sure the escrow amount is correct. Always keep in mind your PID, your med. Those are things we run into here. Your property taxes, of course, and just buy below what you're
What did you
qualified.
say? The pig? P? What was that?
PID, the PID.
Okay, what is that? I don't know that. Sorry.
That's a big thing in Texas, and particularly in your new construction suburbs like Salina. Oh my goodness, so many PIDs, public improvement district.
Okay.
It's basically what funds your bells and whistles. So if you've got a beautiful amenity center and then you've got these gorgeous resort style pools with a lazy river, chances are you've got a PID. Well, a PID is basically like another property tax.
So we call that assessments over here. In fact, let's touch on that a little bit. We call it assessments here. So I wanted to touch on that, and we kind of got distracted, but let me see if I can have something. Local assessments. So it talks about local governments may reassess properties for new infrastructure funding, impacting property tax rates. Realtors should inform clients about upcoming assessments. Let me talk about some assessments where I sold a condo about 4 years ago. This is in Portola Hills area in the city of Irvine. The area is called the Great Park. So I sold this condo to a young guy, millennial, 700,000 all cash, brand new, 3 stories, great area. It's called the Great Park of Irvine. Those who are local will know that. So when we were signing the documents, the lady explained to my client, hey, here's your property taxes and there's assessments. And I had told him that, hey, you're going to a high assessment tax area. So remember I said that Orange County is 1.1% in property taxes?
Yeah.
So when you add your assessments and your Melrose tax, and what that is when D.R. Horton comes in, let's say in Irvine, say, I'm going to build 1,000 homes. City says, fine, go ahead and build it.
Sure.
We'll give you the permit. make sure you build a library, you have room for a park, you have a fire station area.
Uh-huh.
So the city charges the builder to do this, right? And they take a money, a bond. I think it's a bond from the city. It's always in the millions and millions of dollars. So the builders borrow it from the city to do the park, the fire station, the schools, or whatever.
Right.
Guess what they do? They charge the homeowners, and we call here in California Melloroos. One of them is called the Melloroos, Melloroos, and certain other assessments, and that could be significantly high. So, giving you an example of my client, and this was, I sold him the house condo for $700,000, and he just sold it for $1 million and moved to a different house in 5 years, made $300,000.
Wow.
But if his property tax was 1.1%, right? But because it was Great Park and there was assessments and Melrose, his property tax was 1.7%.
Wow.
So he was paying at that time $900 more per month just in assessments. So when you buy a brand new home, or even if you buy an existing home, let's say Wendy sold a house to somebody 3 years ago. So when you buy the 3-year-old home, make sure you know what the assessments are, because they are passed on to the homeowners.
Yeah. And it's a little bit different here because it's not, the PID is not for fire stations. It's not for libraries. It's for things within that subdivision. So it's typically going to be like parks, playgrounds, amenity centers, pools, but it's within that community versus like, they wouldn't do like a fire station or anything like that. It's more of a city thing. Still, and it runs, it's something that is assessed. You're typically going to see it happen from the developer. So it's not going to hit you after the fact. It's going to happen when but it doesn't, like, it's not the fire station or anything like that. So your strategy is you want to find as many cool bells and whistles that you can get without a PID, and the last thing you want to do is pay for very little and still have a PID. So you have to do your due diligence. You got to check out that data, before you buy. So
right. I'm just answering to Iswar here that there are, yes, to answer your question, some areas, especially the newer areas, they do have Melrose, they do have assessments. Some of the older areas like the Northgate or some other areas that are built in the 80s and 90s, they may not have it. Or if they had it, typically the Melrose used to be 20 years or 25 years, and after that it drops.
Right.
But some of them now are becoming 30 years.
Oh my goodness.
So if you buy an existing home that was built in, let's say, 1990, and they had Melrose at that time, it might have dropped because the assessment amount has been paid off for that homeowner share. So it's flexible. But a lot of the new homes, not just Irvine, anywhere in Orange County, if there is what we call a master plan community or homes that have 300, 400, 500 big communities, you're going to have Melrose or assessments, etc. So to buy new homes, be prepared to pay higher assessment fees on top of your property taxes, and then he's saying that here, I'll let you answer that.
That sounds about right. PID is for 10 to 15 years. Yeah.
Is it a monthly fee? Is it monthly?
It's a monthly thing. It's like a tax, and it is paid down over time.
Okay.
I mean, you could pay it off, but why would you if you're not going to live there for 30 years? Because the new owner just assumes, after when he takes it, he assumes the PID. So and that sounds about right.
Okay. And is your PID over there based on the purchase price, or is it based on your square footage of your home?
That's a good question, because it's going to be determined by the CCNRs, and you're going to be given a schedule, and sometimes that assessment amount can change over time as well. So I think it's going to differ by the community. You've just another area where you got to do your due diligence. Right.
Okay. I know way back in the 90s, when they first came out, I remember I was brand new at that time. I sold some homes. It was Melrose was based on your square footage. So the bigger the home, the bigger. But now I'm seeing more and more going based on your price and a percentage of your price rather than the square footage.
Right. Yeah. So, I'd have to look. I would want to look at them individually before I committed. Right. Either way. So,
but again, if you're a buyer, if you're a seller, if you have any questions about PIDs or PID, I shouldn't say PIDs, PIDs or Melrose or what's happening in your market. If you're in the Dallas area, feel free to contact Wendy. If you want anybody else nationwide, I have a huge database of experienced professional agents. I can refer you. or just send us a question if you haven't. Either Wendy or I will answer you. We are here to help you answer questions. And if we don't know the answer, because some of them we don't, we'll get you resources. We're here to help you. We enjoy giving out information. The more we talk, like I didn't know what a PID was. Now I know. Right. So I learn every time I talk about it,
True.
So the last thing I want to talk about, if there is a last thing, is preparation for prospective homeowners. And this may be your territory. So I'm just going to read something else and then I'll let you comment on that. So if you're thinking about buying, if you're a buyer and thinking about buying a newer home or older home, what this report is saying is that buyers should anticipate potential tax and insurance increases post-purchase. So be warned, right? The second thing it says is consult realtors on property tax caps and gather historical data on utility bills for accurate budgeting. We talked about that, right? Hey, ask the seller, hey, what's your electric bill? In fact, I have a escrow closing next week. The house is for 1.7 and they put a brand new solar system on it. And the monthly payment is about $250 a month. So the buyer is saying, hey, I want the house, but I don't want the solar system. I don't want to pay the $250.
Right.
Because it's a cost. I said, no, it's not a cost. The average utility bill for the current seller is about $500. Right? And you're going to pay $250. So you're saving $250 and you're owning a solar system. Problem solved, and he's happy and we're closing.
Sure.
So you have to understand that there is some benefits of other things. So know what your utility bills are, what the gas bills are, what the water bills are. In your case, if you sell your home, let them know, hey, it's $1,000,
Right. Yeah, exactly.
Right?
Just so you know.
Right. And then this is a very important point that catches my attention. It says that aim to budget below their maximum affordability to avoid being stretched thin. Wow. Absolutely. That's the best part of the sentence today.
Yes.
Right?
That is
like you were just saying that buy below your means. So go ahead and explain that so they know.
When you go to talk to a new construction builder and they ask you how much you're qualified for, tell them less than what you are, because they're going to try to push you to spend as much as you're qualified for. Either don't tell them at all or tell them less. You got to stick to your guns and stay disciplined on it.
And then they're going to sell you the new kitchen and the new tiles and new drapes. They're going to stick those $20,000, $30,000, $40,000 worth.
It's got to not fall for that.
Breaks, right.
Unless it's within your budget, right?
Right. Yeah. So do you have any last comments, Wendy, to give out to any buyers or sellers watching or will be watching down the road on our live channels? Or I
can't think of any. It's really been a pleasure being here tonight. But I can't think of anything else. So yeah.
Okay. Cool. Well, everybody, thanks for watching. For any Dallas questions, feel free to Wendy. By the way, in my description of my YouTube channel on this video, I will have her email address and her phone number and her YouTube channel address. So you can visit, contact her anytime. You can always contact me. Thanks again. And if you have any topics you would like to discuss, if you're watching a recording, just make a comment and we'll be on it. And Wendy, if you don't mind, I'll bring you back sometime after January when I get back.
Sounds good.
As a guest. Okay.
Great. Yeah.
Thanks.
All right. Bye, everyone.
Thanks, everybody. Okay. Bye-bye.
Bye-bye.